Many investors in equity index products use the official closing index level as their benchmark for trading. But when trading futures, how could you execute against the closing index price? The basis trade at index close, or BTIC, solves this problem by allowing market participants to trade futures at a fixed spread to the closing underlying index level. How does this work? A buyer and seller agree to trade futures contracts, but instead of agreeing to a specific price, they agree to a spread or basis to be added to that day's closing index level to determine the futures price. The basis is agreed upon before that day's index level is known. The value of the basis depends on the all-in financing rate, dividends, and the time left to contract maturity. The value can either be negative or positive. Once the official closing index level is published, the actual futures are transacted at a price equal to the closing index level plus the agreed-upon spread. Let's see how BTIC works with an example. A fund manager benchmarked to the Topix index receives an inflow of $10 million to be put to work at the day's closing index level. At the current level of 1620.0, she calculates that the fair spread between the Topix future price and the cash index is minus 0.50. Seeing that the Topix futures multiplier is 5,000 yen and applying a US dollar to Japanese yen exchange rate of 110.88, she submits a bid to buy 137 Topix futures at that spread versus the afternoon's closing index level. At the same time, a trader on the equity finance desk of a large investment bank concludes he could save money by replacing his short physical stock position in the Topix constituents with futures. He calculates that he needs to sell those futures at a basis of minus 0.50 or higher. He sees the fund manager's bid and hits it. The trade is executed. Having sold the futures, the equity finance desk then enters a portfolio to trade a $10 million index replicating stock basket at the closing market price to reduce his short stock position as planned. The BTIC trade is complete. Shortly after 3 p.m. Tokyo time, the official Topix index close of 1623.03 is published. The trade is now settled. The fund manager buys 137 Topix futures at a price of 1622.53, which is a minus 0.50 basis to the closing index level, and the equity finance trader sells them at the same price. We've seen how index fund managers can use BTIC and how it allows equity finance, index arbitrage, and stock loan traders to optimize their holdings between futures and physical stock. A wide range of other market participants also use BTIC, including equity swap traders who use BTIC when hedging market on-close trade exposures, and index option traders who use BTIC to take advantage of the surging volume at the cash close to adjust futures delta hedges with minimal impact. The BTIC order book is open 23 hours a day, allowing real-time price discovery in the futures market, and investors around the globe submit orders against the next index close. So that's the BTIC. The basis trade at index close.